Hi there, this is Bill with Smart Trades. It's Monday, October 18th. It's about 10:10 a.m. Pacific time, and I wanted to briefly go over the dollar index count for a couple of reasons, just to update it, and also because I suppose some people are confused by my labeling back on Friday. And one of the reasons for that is I had labeled this as a wedge decline with an A, B, C, D, E pattern. We could just as easily label it, and perhaps more properly label it, as a five-wave sequence in the wedge, if indeed it does ultimately make a new low and become a wedge. This is all just, to my way of thinking, conjecture at this point. We've got several steps to go before the dollar makes a new low. Again, if indeed it does. That said, here again is this is basically the same chart posted on Friday, again with the new labeling, and the possibility that we have just bottomed in a wave D of a triangle and of a wave 4, or D wave if you prefer, and that we're going to rally before dropping down to a possible new low. Now here's an alternate, and in fact I think this is probably a preferred count in the long term. But again, I mean, we're probably months away from the test of this upper trend channel, so we'll cross that bridge when we get to it. But the reason that this is preferable is that it would probably lead to a bounce up near the top of this upper channel that connects the top of the move and the top of wave 2. Now, at this point, let me read something from Robert Prechter's terrific book, The Elliott Wave Principle. And he never talked about currencies. I don't believe in that book. He did talk about commodities and individual stocks. And keep in mind that in the mid 70s to late 70s, when he was writing that book, currency trading was not nearly as big a deal as it is now. In fact, it had just started in the early to mid 70s. At any rate, talking about commodities, he says one difference between commodity charts and charts of the market averages is that in commodities, primary bull and bear markets at times can overlap each other, as they are not allowed to in the basic Elliott pattern. Moreover, a little later, and this is again in that section on commodities and individual stocks, therefore, while beautiful charts of supercycle degree waves do exist for a number of commodities, it seems that the peak observable degree in some cases is the primary or cycle degree. Beyond this degree, the principle gets bent here and there. Again, those are Prechter's words, not mine. And the point being that, and I think this applies to the currencies, is that the stock market is more or less a record of the complete human progress, so to speak. The Dow is sort of a mirror or a track record of our economic progress on the planet, whereas currencies and commodities and so on and so forth, I think they're gonna break down into the Elliott wave patterns, but they're not going to just go to infinity, so to speak, as the stock market, theoretically could. Obviously, it's not going to infinity, but again, the point is, comparatively, you're going to have bull and bear markets start, stop, and go back to a relatively low starting line or baseline for stocks, commodities, and currencies. At any rate, here again is that preferred count, and the point here is that even though we have a possible wedge, that in a stock market count of this magnitude, you might expect the dollar was going to go up to 180 or 170 or even much higher than that. In this case, I wouldn't make that conclusion at all. We'll just have to play it again, as I always say, one step at a time. Here's a breakdown again of that count. This is just looking at the same count that we had in the last slide, but it's on a weekly basis. and it shows again that we have an A equals C, and that would target somewhere up in that 95 to 100 area, which would coincide with that downtrend line going back to the 80s. And here is again that same chart, and looking at it even a little more closely, and a little more evidence that indeed we have a possible triangle forming, to my way of thinking, in that we've got subsequent swings, basically as Fibonacci ratios of previous or alternating swings in the triangle. This is a typical scenario for triangle patterns. Here again, this is the chart posted on Friday, and it shows again a possible ABC decline, and the nice thing is that that coincides with that lower channel of our possible triangle. And here's the hourly chart of the dollar, and again a possible 5-wave sequence, a broken trend line, good volume on the bounce, so on and so forth. It's and again, our 1 equals 5. This was talked about on Friday, so I'm not going to go into it. But long story short, both on the weekly and monthly and even the hourly or 240-minute charts here, basically we have a nice set of patterns indicating a possible bottom, at least a short-term bottom. Now, this is actually the Euro futures. Euro currency, if you will, and a 10-minute chart. I actually did this on Friday just to show how I might trade this, and what I'm looking for is I'm looking for a confirmation decline, corrective rally. By definition, it doesn't make a new high, and then a breakdown, and I would play that breakdown and then move my stop to break even as quickly as possible. And here's the big picture, and the point here is that you have a situation where you might initially risk 40 or 50 points in the euro, bring your stop to break even, and the potential of a trade of this nature is to that other trend line, assuming the count is correct. And so you're risking 40 or 50 points and hopefully getting that stop to break even for a shot at nearly 1,800 points. Now that's what I call a good risk-reward ratio. Obviously you need to use the stops, and there's no guarantee that we're going to hit that target. But in theory, that's the kind of deal that we're looking for. And finally, here's an update of today's action. Here's that prior breakdown, and that actually you would be able to have hung on to that so far. And here's what I would look for, at this point forward, something like this where perhaps we've got an ABC rally back up that we're still working on. We break the trend line, we rally back up and make a lower high, and again sell that breakdown, always ratcheting the stops lower, hopefully to break even, and perhaps pyramiding into this decline if indeed we've made a turn. Anyway, hopefully this all makes sense. I'm trying to keep it brief here and to the point. Hope you're having a great day and a good week ahead. Thank you so much for watching. Bye-bye.